All right, hi everyone, welcome to the channel. Today I'm going to show you how to become a millionaire by investing in the stock market, but not just that, how to grow your net worth and financial literacy using tools like ETFs and compound calculators. So the first ETF I'm going to show you is QQQ. This ETF closely follows the NASDAQ 100 and holds shares like Apple, Microsoft, Amazon, Tesla, Google, Facebook, Nvidia, PayPal, Adobe. If you look at the past 10 years, if you had put $10,000 into QQQ, you would have 75,343 US at the end of 10 years. Over 1 year, the last year did 29.3%, over 3 years 25.33%, over 5 years 25.67%, and over 10 years, which is the number we're going to use, it has done 22.38% returns annually. So taking those numbers and moving over to the compound calculator, let's say that we have that $10,000 starting balance and we use that 22.38% return annually. Then we put in, let's just say 15 years. The starting balance is actually the most important part, but the periodic addition is the best habit you can build in your life. If you could possibly save up $250 a month, I know I'm asking a lot here, and you save like that for 15 years at a 22.38% annual return, you will have $637,928 in your bank account by the end of 15 years. So to get to the million, let's see how long that takes. Let's do 16. Not there yet, 799, not bad, 17. 17 years, you'll have $1 million in 17 years. Let's say you save that like that for 25 years. You're looking at $5.9 million in your account. And let's say you don't want to retire till you're 65 and you're just turning 20 now, just to have some fun. So 45 years. Oh, you'll have a good clean 504 million. Now these aren't all guaranteed because there can be market crashes. The reason why this is so powerful is because of a thing called dollar cost averaging. If you continually add that $250 and you're gonna catch, if we dive into the QQQ chart, you're gonna catch all the tops, all the bottoms, and everything in between the whole way through that, however long you're saving and investing the money. So the compound effect is very powerful if you contribute continually throughout the entire, I don't know, let's say 20 years of investing. Now let's say you're a nervous Nelly and want what I would consider safest thing out there with regard to the stock market, the Vanguard S&P 500 ETF. If you go through the VOO website, you can see the stock that this ETF holds. So over the past 10 years, it's averaged a 16.51% annual return. So if we put that same starting $10,000 in our compound calculator, and we put 16.5%, and then we put 17 years, which is what it took the other QQQ index to get to $1 million, and then we add the same $250 a month, and we hit enter. So you will have 438,765. Okay, so now guys, I'm gonna do something really fun. Going back to those original QQQ numbers, this compound calculator on the App Store allows you to go to a thing called withdrawal mode. So you've hit the $1 million mark after 17 years of investing in QQQ, and you wanna start an early retirement and not have to work another day in your life. So I've input $1 million at a 22.38% annual return. Still using that same number. That could go up, that could go down. We'll play with it in here. And let's say you're retiring for 30 years and you're taking out $6,000 a month. At the end of that, you'd have 500. At the end of 30 years, even with the withdrawing $6,000 a month, you will have $525 million. That sounds a little nuts, but that's the power of the compound effect. Let's do 40 years. 4.8 billion. Okay, let's just, for all those people out there who like to play it safe, let's put this down to 12%. At the end of 40 years, you're gonna have $48 million in there. And let's put it down to 20 years. 4.9 million, and you've withdrawn 1.4 million over 20 years. So let's say you want to be living the high life. Let's do $7,000 a month you want to live off of. You'll still have 3.9 million at the end of 20 years at a 12% return. See, this is something you could do, kind of play around with on your own. The most important thing I'm going to say to you right now is the longer you can live below your means as a young person, the higher the reward later in your life. So what I'm saying is, don't use your credit card on bullshit like fancy boots. Save your money, put it in these index funds, and long term, you can live like a king with the compound effect. All right, I know I told you guys that this was an ETF, how to become a millionaire video, but I'm gonna spoil you with a little extra segment. And that's what I think Tesla's gonna return until 2030. I see Tesla doing 30 to 40% returns annually on their stock. So let's say you save up $10,000 and it's the year 2022 right now. And let's just meet in the middle. Let's say you get 35% returns for 8 years until 2030, and you're adding in that $250 per month. So in 8 years, you will have $284,837 in your account. You can really see the compound effect when you get those higher percentage returns. Now, is it a guarantee you're gonna get those? No, but I'm speculating that, and I have high conviction that Tesla is gonna be a growth monster for the next 8 years. Okay, so now let's add my calculations and numbers into my personal portfolio. So right now, in my 2 accounts, I have about 400,000 US. And let's say I'm expecting that 35% return, and I want to retire in 8 years. Okay, by 2030, I'll be 35, 36 range. So let's put 8 years, and I'll be adding that $250 a month. Very doable. So I'll have 6.4 million in there. And then if we check out the graph, look at that. Pretty. Compound effect is a beautiful thing. Let's go to withdrawal mode and try those same numbers. Let's say I want to take out monthly 5,000, and by the time it's 2030, I have that $6.4 million. 1, 2, 3, 4. Make sure I got the right amount of zeros in there. Okay, and let's say by the time it's 2030, the annual rate of return is going down to 12. Tesla, by 2030, I'm saying, I'm being super conservative, is only returning you 12% a year. And I want to be retired for 50 years. So I'll have $2.3 billion by the end of that. Let's go to 30 years. I'll have $212 million. Now these can all change, but I just want to kind of show you how much fun you can have with this calculator. And it's good to see, even if you cut these numbers by a third, look at the growth. We are making fat stacks. One of the most important things that I want to explain right now is that the idea of safety in the stock market is a little bit misleading, because the way you have to think about it is, if you have an S&P 500 VOO index and you have the QQQ index, both are going to crash when a stock market crash happens. The most important thing is, whatever one you're holding, is that you must buy while it's crashing, because that's how you properly dollar cost average in, and in the long run, you win. All right, thank you everyone for watching the video. I'm just glad you stopped by, wanted to learn how to make some fat stacks, and it's exciting using that compound calculator and just learning the power of compound interest. So please subscribe to the channel. I'll put out videos daily, just on whatever you want. Comment below what kind of videos you're looking for. Again, trying to start a cult of maniacs who want to make fat stacks. See you guys.